Hi, everybody. This is the investing teacher, high school science teacher, teaching others how to invest. This video, I want to do a dividend and passive income and options update for November of 2020. It was the best month ever. Let's see why and how, and if there's issues with it. All right, guys. So November 2020, I did hit a landmark for passive income. First time this year and second time ever where I made a passive income over $500 at $516.27. The only time I ever reached 500 was last June when dividends didn't get cut, and I had a lot into international funds that happened to pay big dividends last year at 517. But if you look through this year, it is higher than last year, which is a good idea, but never hit the 500 until last month. So what happened? SPHD, I went from 2136 to 705. I had to sell some of my positions of SPHD, and I didn't receive the dividend for it. Main Street Capital, though, increased again about 25 cents. However, next month will be a little bit lower because some of my shares got called as well. KBWY is continuing to decrease. It went down another dollar. I didn't actually change my position in it. So the small cap REITs, although the actual fund went up quite a bit in November, I think it went up almost $4 a share, but the dividends went lower. Something to consider. I'm keeping a long-term approach to it. I think it'll bounce back by middle of next year or so, back to the old 32s and so. Realty income, 24.33, been going up about 15 cents every month, reinvesting almost half a share a month as well. Now, the big difference this month was my option trades, $408, and I'll go over that later. Quarterly dividend payers, I had AT&T at 16.12 and MasterCard, my steady 80 cents. No YouTube income, but hopefully next month there will. So please like, subscribe, share, all that good stuff so you keep the channel going. Notes, I did sell a lot of cash secured puts and covered calls. Sometimes I don't really feel like I know what I'm doing there. And as you'll see in my positions, there were some that got called, unfortunately, and that does happen. Might have been taking a little bit too much risk to get that 408. So one of the issues that I'm seeing is I did receive all this money. I am reinvesting it into these companies to get more dividend and passive income. However, some of my shares did get called, and I'm not putting that into my actual results. Here are my option trades. There's quite a bit. We'll start at 18. Realty income at the 5th of November. Sold a pretty quick covered call for only a few weeks. Received $21. And that was a pretty big mistake because it went way past 62.50. I bought it for $190. That was a $170 loss on that position because I really like realty income. I wanted to keep the shares. So if you look later on 1009, I had to move out really far into March for my covered call. I moved it up though from 62.5 to 67.5. So that is a $500 gain if it reaches 67.5. And there was a $210 premium. I wanted to make sure that my new premium was a little bit higher than the loss that I took on the other one. So I wanted to keep my shares. And the delta is a little higher than I like as well at 0.34. Realty income did shoot up quite a bit in middle of November. So this is a position that I'm just holding on to right now, March 19th. It has been going down. It's in the low 60s right now, even 59. So there's a chance I buy back this call maybe at $50 or so in about a month if it stays at this stock price. Pfizer, I sold one for $12.04 for $101. Pfizer did announce that their vaccine does work and is very effective, about 94% effective. So I ended up buying it back for $272 because the stock was at 42. And I made a previous video of that. I'll leave a description of my thoughts on it. For Pfizer, I did buy back the call to sell another covered call, try to move it out to January 15th. I did receive $219 premium, so I am a little bit net gain on Pfizer, and I did move the strike up to 40 instead of 38, which is another $200 gain. The problem is the delta was 0.53, so it's a coin flip essentially if Pfizer will hit 40 or not. So it's definitely taking a look at that. AT&T, Another one where I might have made my strike price a little too close at 28.50. I bought at 36, but sold at, sorry, I sold at 36 to receive that. I bought at 100, so that's a loss. But then I moved up and out my AT&T to 29. I have to wait until February on it. The reason why I picked February 21st is I'll still receive my dividend of AT&T of $16. So this one I did move only up from 36 to, that was a premium. I moved it from 38 to 39, or 28 to 29. So I only moved it up 50 cents, and I had to wait a few months out. This is another one where I might just go wheel strategy, where if it does get a sign, I sell cash secured puts on the side to keep the wheel going. There's a possibility. However, I think AT&T will be good long term, and it pays a 7% dividend, so I might keep it. Main Street Capital, my shares were assigned, so I only made a $24 premium on it. It was a delta under 0.3, but it did get called, and I had to sell 100 shares at 30, which left me $3,000 in purchasing power. Intel, I sold a call. I think Intel was my biggest mistake that I made. Intel was fine when I sold my cover call for December 18th at 50, and then I thought that it was not going to get anywhere close to 50. I made a $40 premium, but I bought to close at 16, so a little bit of a gain there. But then I sold another call on Intel, moved it out a few weeks, but I sold it at 48 instead of 50. I lowered it to receive that bigger premium. However, Intel very likely could get called at this point, so I might have to sell my 100 shares of Intel. Newt's been a steady payer for me. I pick low deltas. I don't get much in premium, $14 on this one, but I've never been assigned yet. And strike price at 20 is higher than my cost basis anyway. So Newt pays a very high dividend, about 11%. And I'll take these slight extra premiums that I'm receiving just to boost up that return a little bit more. So Maine and SPHD were called in my Roth IRA. For Maine, I'm doing a wheel strategy on it. It was $31.41, so that was essentially $141 I could have made because I had to sell at 30. I sold a cash secured put because I had $3,000 in my brokerage after selling the 100 shares of Maine. So I sold the cash secured put for Maine at 30 again, and I did receive a $44 premium, which is good. However, I'm not going to be receiving $20 in dividend payments that Maine would be giving with the 100 shares. So in a way, it's only a $24 gain. If the stock gets lower than 30, I'll end up buying 100 shares at 30. If it goes down to 20 or 15, I'm in trouble there. But if it goes right close to 30, 29, 29 and a half or so, I think I should be okay there. I had extra funds in SPHD, and I'm trying to back away from SPHD from last month. I purposely sold a covered call with a delta about 50 because I wanted to do more wheel strategy. I did the wheel on Bank of America, and I did do a thorough video on the wheel strategy in my last video. See, $17 for a 1 week expiration, which is not a bad return. $17 for $2,700 put up. Get about 0.2% in a week. So that one I was considering doing. It actually dropped down significantly because Bank of America went up a lot. So I bought to close it at $3 a day later. So I literally made $14 in a day. I then sold another cash secured put for December 24th. This paid a higher premium because it's further out, and I got a $45 premium for that. Strike price is at 27, which is still relatively safe. Delta's only 22% chance that I might get to 27 or lower. And I'm going to do wheel strategy on Bank of America to see how long I can keep that going. Store Capital in my wife's Roth IRA also got assigned at 30. It was at 32.65, so that was a $265 gain I could have made if I just didn't sell the covered call in the first place. I ended up selling at 30 again, trying to do the wheel strategy, getting my shares back at what I sold it at. To get a $34 premium, very low delta, only 19%. And then the stock continued to go up, so I bought to close it at 16, made a decent profit for that for only about a week. Sold another covered call on store, sorry, cash secured put on store. I moved it up to 32.50 because the stock was at 33.42, and I do like store capital a lot. I want to keep that as one of my long-term holdings, and I'm going to be a little less risky in my deltas. I'll probably make deltas at 0.1 to 0.2, just receive a tiny premium for it. But I do want to get my shares back. The shares at 32.50 would be a $250 loss because I had to sell at 30, buy back at 32 if it hits it, but I did receive a $64 premium. So this one I don't mind if it gets under 32.50. If it stays a little over 32.50, there's a chance I might just buy 100 shares or just sell another cash secured put at 32.50 and just keep that premium coming. So the reason why I'm doing this with store is to lower my cost basis. So I'll have shares at a lower price. I'm still up quite a bit on the transaction. My initial cost basis at store was about 27.50. So I am up quite a bit on it, and there are dividends that will come out. Dividends will be in January, so there's a chance after 12/18, if it stays above 32.50, that I might just buy the shares so I collect the January dividend. It depends on what the premium is. It might be worth just selling another cash secured put. So that's one of the issues I'm seeing with my passive income. It is true I did get that much in passive income, but there were some gains that I could have made if I just didn't do those in the first place. It was a very volatile month in November. It was one of the highest months ever for the stock market. I think since 1987 it's been this high. So there's a chance, and my stock did go up quite a bit. I had a lot of SLYV that shot up a lot, and KBWY gained a lot as well. So I'm not complaining about it, but I need to make sure that I'm keeping my deltas low. I don't mind getting very small premiums just so I keep my stock, and then I could just get very small premiums to reinvest. So let me know your thoughts on this video. Again, I'm the investing teacher, high school science teacher, teaching others how to invest. Like, subscribe, share, all that good stuff. Really helps out the channel. Thank you for watching until the end of the video. I really appreciate it. And you guys have a good day.